Hello, this is Mark Halm. I'm the author of Creating Wealth Through Self-Storage, and I'm the creator of the Self-Storage Quick Start Academy. By the end of January, how to build your first self-storage facility is going to be released on the QuickStartAcademy.com. We're working hard to get that launch date. A lot of work goes into launching this course, and we're about there, but I'm told the end of January. Thank you very much for being here. And if you've been out looking to purchase self-storage today in today's market, you've probably had a conversation like, they want how much for their facility? There's no way. Maybe we should build, but I don't want to build. I don't want to build my first facility. I want to buy a facility, get into business, learn what I'm doing, then I'll build. Well, in today's market, as these prices are going up, and as you know, the pressure from the large players in this market, mostly the publicly traded REITs, they are under a lot of pressure to buy. So they are willing to pay very high prices to get product online for their investors. And what that's doing is driving the price up on everyone, including the small investors like you and me. But we have found in today's market a niche that works very well for what we're doing, and I want to share that with you right now. If building is too big a prospect for you, and it's not that you can't buy a facility that's existing that will give you the returns that you need, it's just that they're very hard to find. And you've got to be very confident in your projections to do it. We're buying them, but they're hard to find. But what we have found that works very well for us is expansions. Expansions, where you buy a small facility, 15 to 35,000 square feet, and there's room to expand it, and you double the size. And for us, our business model is we're getting it up over 50,000 square feet. And what I like about that model is you've got cash flow from day one, and you can still create the value that we need to get the returns that we're after. So let's get a little background on this. The REITs, the large players that are putting so much pressure on the market today, if you look at the total volume of self-storage and what they own, it's approximately 12% of all the facilities. So the vast majority of facilities are not owned by these large players. In fact, over 60% of self-storage facilities today are owned by people who own just one facility. Now, many of these facilities were built in the 70s and 80s or maybe early 90s. They've had one owner or two owners, and these owners, in the next 10 years, there's going to be a high percentage of these people going through generational changes where they're wanting to dispose of their assets and sell them. And what we have found time and time again is that these owners get very complacent with their self-storage. They are making good money with it, and they don't want to rock the boat. I cannot tell you the number of times we've looked at a facility where there's been no price increase for 3 years. They don't want to lose their customer base. They're happy with what they're earning. They haven't remodeled or updated their facility in 10 years. They don't need to sell retail because they're happy with what they're getting. There's no truck rental because they only have a part-time employee. We find time and time again that there's a lot of these facilities that are totally underutilized, and we can analyze it and pretty accurately determine what the cash flow we're going to be generating on this facility is. Then if we can double the size, add square footage to it, bring that product online at the cost of the building material and putting it together, and pay the seller for his cash flow and excess land, we can generate good returns, even in today's market. We're finding these on the outer belts of the cities, or the Tier 1 and Tier 2 cities. They're so small that the REITs aren't focused on them right now. The REITs are really trying to buy the larger facilities in the inner belts of these cities, and we quietly go to the outer belts, find these things that we can expand, or where there's vacant land next door. So out of the last 3 facilities that we brought online, 2 of them have been this expansion. So one was in our hometown market. There was an existing 25,000 square foot facility. Then we purchased the 1.5 acres next door. On this 1.5 acres next door was a 29,000 square foot industrial building, about 3/4 of an acre up front that had nothing on it. So what we did is we took that industrial building and put climate controlled self-storage in there. We were able to get approximately 20,000 square feet of climate controlled storage, and we added an additional 12,500 non-climate controlled storage out front. And we turned that little quiet, hidden, even though it was on a 4-lane road, it was a hidden facility. We turned that quiet 25,000 square foot facility into a institutional grade 57,500 square foot facility. When we bought that 25,000 square feet, that facility was generating gross between 8,500 and, on a very good month where you got some prepaids, maybe 11,000. Today, we're getting between 45,000, and after our price increase in the next 30 days, we're going to be pushing close to 50,000 a month on that thing. We're able to get the 11 and 12% returns off this that we need to get to fulfill our business model, and we were able to do it because we brought that new space on at the cost of the construction and the labor, not by having to pay for the income stream. That is a great model for many of us smaller investors in today's market. So what do you look for? Well, you look for a facility that has a lot of excess land. Look for a facility that has a lot of parking on it. Taking land out of parking and putting self-storage on it really increases the income stream on it. You want to be looking for properties that have between 15 and 35,000 square feet that you can expand. Our model again is to get close to 50. Do your model. Maybe your model is you buy 10,000 square feet, fence it in, add another 10,000 and put a kiosk in there. Whatever your model is, look for properties that would fulfill on that you can expand. Pay the seller a good value on his current cash flow, but you can create more cash flow at the cost of the material and the labor. Here's some of the good news. In the last 3 facilities that we've brought online, our feasibility report, and always get the feasibility report, our feasibility reports have been indicating to us that we're going to bring new space online and it's going to absorb, or in other words, we're going to be putting in service and renting a net 1,200 square feet a month. In our financial projections, we modeled the whole pro forma out at 1,200 new square feet a month coming online. The reality is, in all of our projects in the last that we brought online, we've been over 3,000 square feet a month. Now, I'm not saying that's going to be your experience, but I'm just saying in multiple markets, we're experiencing that. So there could be a lot of reasons for that, but that really brings the income in much quicker, allows us to start paying our investors faster or utilizing the cash flow ourselves, and we're real excited about this model. This could be a solution for you to get in this fantastic business called self-storage. Whatever your business strategy is, here's my coaching. Get in the business. Get in the self-storage business or grow your business. This is a good time to be doing it because the market is doing well. People are accepting self-storage, and we're experiencing high occupancy rates and high absorption rates. There's never been, even though it's challenging, there's never been a better time to get in this business. Don't hesitate. Be able to analyze quickly, have the courage to pull the trigger when you find something that fits your model. In the due diligence time period, even if you only have 30 days, that'll be enough time for you to run your financial model based on the information you get in the due diligence rather than your assumptions up front. And if it still works as well as your assumptions, or you can hit your business plan, buy it. Get in this fantastic business. If you want to learn more about how to financially analyze a property, for free at Creating Wealth Through Self-Storage, you can look at the 3 videos training course on how to buy in today's competitive market. And particularly video number 2 goes into detail about how you can analyze a self-storage facility. Also, the Storage World Analyzer, if you're not good with Excel spreadsheets, that is a tool for you that you can use that's not a spreadsheet where you just input the data. It's a cloud-based performance financial analysis software, and it really supports the small investor in analyzing this. More about that at creatingwealththroughselfstorage.com and storageworldanalyzer.com. You don't need it, but it can totally support you if you don't feel you're good with numbers or spreadsheets. So thank you very much. Go out and look for properties that you can expand. My name's Mark Helm. I'm the author of Creating Wealth Through Self-Storage, and I'm the creator of the Storage World Analyzer. Also in this month, we're launching the construction phase of the Storage World Analyzer to support you in analyzing expansions and construction. So thank you very much.